Hi everyone, welcome to our YouTube channel. In today's episode, we'll be providing you with important updates and information that you need to know as the pandemic period comes to the end. To help us today, we have Henry from Bentley's Queensland.
Thank you.
Thank you. So Henry, at the moment, let's just divide this into the accounting aspect and the legal aspect. In the accounting wise, what are the must-knows that the business owners in Australia should know as the pandemic period is coming to an end?
Well, one of the key things that people should know about is regarding JobKeeper. It has been popular in the press and is one of the most hot topics. The original JobKeeper is coming to an end at 27th of September. Now, the government has extended this and has called it JobKeeper 2.0. It is not quite exactly the same thing. It is should we say, a stricter, leaner version of JobKeeper 1.0 with additional tests. One of the key differences between JobKeeper 1 versus JobKeeper 2 is to get into JobKeeper 1, you can use projected numbers. To be eligible for JobKeeper 2, to be eligible for JobKeeper 2, you need actual numbers. So what it means is it will compare September 2020 quarter for your BAS against your September 2019 quarter. If the downturn is still 30% compared to your September 19 quarter, you can be eligible for JobKeeper 2.0. Another important difference is there are a few additional tests. One of them is very similar to the first one. It needs to be only certain key people, so backpackers are not eligible. Casuals may be eligible if certain conditions are met. And full-time and part-time workers are eligible if they meet certain visa conditions. One of those tests is under original JobKeeper 1.0 is staff that were employed as at 1 March are eligible. Now they've extended that to say people from 1 July can also be eligible.
Oh wow.
Yes. And now in the old JobKeeper 1.0 is a flat rate of $1,500 irrespective if they're part-time, full-time, long-term casuals. JobKeeper 2.0 actually splits this between $1,200 for full-time employees and $750 for part-time employees. As to how they determine who is full-time and part-time, it's based on an 80-hour test on the period previous to 1 March 2020 or 1 July 2020. You must, within 28 days, have worked 80 hours. For those people who have worked above 80 hours, you're full-time. For those people under 80 hours, it is part-time. And so you should really start finding out who is full-time, who is part-time based on that 28-day period, either pre-1 March or pre-1 July.
And then one of the, I guess, a lot of questions I'm getting recently with regards to JobKeeper is when do I find out if I'm eligible, or when do I have to file my eligibility for 2.0? Is it now, or do I do it in 1st of October? They've been asking a lot of questions. What's your answer to those questions?
You should actually be quite confident what your numbers would be. As part of JobKeeper, you need to do monthly declarations. What I would say is based on those monthly declarations, you can have a good estimate of what it is. I would suggest you get your documents ready now. If you know, compared to September 2019 or a comparable period, as to whether or not you can meet JobKeeper 2.0. You should work very closely with your accountants in regards to tabulating that information now and figuring out who among your employees who can be eligible for this new JobKeeper. As to when to formally document all of this, you're absolutely right. It is 1st of October onwards because that is when you should be lodging your BAS. That is the basis that the HA will be using to determine whether or not your business is eligible for the new JobKeeper.
Great. And I have those clients who are not satisfied with their accountants currently and they want to move to a new accountant, but they are afraid that it will affect their, the JobKeeper eligibility and requirements and documentations. For those clients, and what do you suggest for them to bring to the new accountant if they want to move?
I would say send to your new accountant the information you sent to your old accountant in regards to what your monthly turnover is, what is the expected BAS going to be, is actually quite important to determining whether or not, one, you are eligible for the new JobKeeper, or two, if you are eligible, what other information you need and should start preparing in order to be the first one in to get the new JobKeeper. Further expanding actually on your query, Sharon, some of our clients have further asked us is they've heard that there are now 2 tests, which is one is in September and October when the new JobKeeper comes in, and there's another one from January to March.
Mm-hmm.
As part of JobKeeper, they actually split it into 2 3 months sections. So to be eligible for part 1 is you must compare September quarter compared to September quarter last year, have suffered a 30% drop. From January to March, same theory applies, is for part 2 of new JobKeeper, you also must have suffered a 30% drop to the last period, in other words, October to December. If you are eligible for the first section but not eligible for the second section, you can only claim 3 months. You can still be not eligible for part 1 but still be eligible for part 2. So you may miss out on the first 3 months, but you can still always apply for the second 3 months.
That's a very important information.
Yes. And also for the second part, just to, I guess, taper off people of JobKeeper, the rate is slightly less. As part of JobKeeper 2 first section, it was $1,200 for full-time employees instead of the flat $1,500 and $750 for part-time employees. For second part, it is now dropped to $1,000 for full-time employees and $650 for part-time employees. So I'd say work very closely with your accountant now to figure out who are these eligible employees and see if you can identify those who are eligible and ask them if they want to participate.
That's a very important information, and I hope you guys go through your business and determine whether you're eligible. If you're unsure about it, just always call Henry or call your accountant to find out the information.
I've also found that Lisa seems to be almost a forgotten topic in the sense that people potentially some of them aren't paying for it or are not raising it as an issue.
Yeah, absolutely.
I find that this is quite dangerous from a legal perspective. What are your thoughts, Sharon?
Well, it's dangerous in the accounting and a legal perspective with leases. So there's common rumours out there or advice that they get from friends or people that they know, which is if you're in the midst of negotiating still your COVID-impacted rental with your landlord, people think, oh, I'm just not going to pay rent, I'm not going to pay outgoings until this is all resolved. Until probably now, we would have suggested for you not to pay rent, but outgoings to be ongoing to be paid, because outgoings is what you use, so your electricity, water rates, so that you really have to pay that rental amount. You can negotiate, that's fine. So I hope that clarifies a lot of misconception. Second part is they go, well, my business is not doing well. I'm not going to pay because I can use the excuse of COVID and they can't do anything about it. As September is coming to an end, what I can tell you, our clients, is it is a wonderful season for the landlords to really get ready for the notice, which is breach of lease notice to be sent out, which means if you don't respond or rectify the rental arrears in 30 days, basically they can lock you out of your premises. So that's a severe consequence. Second thing is if you don't pay it, you'll be hit with a statutory demand or letter of demand, which then after a certain period, you can be wound up.
How bad is it if people end up getting a statutory demand and actually don't raise it with either their accountants, lawyers, or their professional advisors?
Well, it's quite severe because there will be a court date that's going to be scheduled and they will end up with a default judgment. So they will have no say and to explain their side of the story, which is quite severe. Second part for me would be is their credit ratings will be going down. And a lot of classic mistakes a lot of clients are making is even though they've negotiated the terms of the lease, and the rental waivers and how the deferred payments of the COVID rental agreement will be paid, but it's not in writing, it's done orally. And there's a lot of risk around that, because if you don't have it in writing, when it comes to October 1st, if you get hit with a breach of notice, you can't say anything about it, because at the end of the day, unless you can evidence your agreement, there isn't much measure you can have in terms of that.
in such situations, we've stated this weeks on end, documentation is extremely important.
Absolutely.
And in the situations such as a statutory demand, where the counterparty says you have not done X, Y, Z,
Yeah.
I guess documentation is your only argument against it.
Yes, and so my advice to those clients who are still in negotiating with the real estate agents or landlords agents is just to put into an email what you have discussed so far and say, look, we've discussed this point, we have agreed on these points. These are the ones we're still in negotiations, and you understand that we haven't paid until here, and you promise not to come after us or claim rental arrears to be paid immediately upon the end of pandemic period. And just have that in writing, because if they don't respond, it's on them afterwards. But have that, because that is a reference point. Even when you go to court or let's say you go into dispute resolution, you can use that as a foundation basis for a discussion. Henry, during the pandemic period, the government did a wonderful thing from the April to September, where they allowed businesses who are impacted by COVID to have a cash flow boost relief measures, programs there, to give them a bit of incentive and relief. Would that be still continuing in this new period from October onwards till March next year?
Short answer, no. The cash flow boost effectively ends when we launch the September BAS. There is no mention of an extension of effectively a second cash flow boost program, then only in the sense that a JobKeeper 2.0 will be extended. Sorry, only in the sense that JobKeeper will be extended in the 2.0 version. But you actually made an interesting point in regards to the HEO itself. The HEO, I will state this, the HEO has been extremely lenient in the first 6 months of this pandemic lockdown.
Oh, absolutely.
It's touching on what you've mentioned before. They have not charged interest on debts owed by businesses or individuals. They have been working quite well, actually, with everybody in regards to payment plan, interest charges, default notices. There was no penalties whatsoever.
And they haven't really chased it up
No,
as actively as previously.
No, absolutely not. I've had several cases where employees have not paid the correct super or outstanding super for their employees. They actually were frozen for the past 6 months. And I am aware now that it is now being reactivated and people are chasing things that should have been chased but frozen during the pandemic period. So keep a note that if you do have HEO matters outstanding, please be aware that the HEO are now chasing or starting to chase.
I guess another common questions at this point a lot of clients ask is, well, Victoria is going through a severe COVID impacted period. So does that mean a new law is coming out? So they're not paying anything, thinking that further measures will come out. I'm telling my clients legally, please don't. Please keep up with your obligations. Queensland, New South Wales, we have different requirements at the moment because obviously we're not in a stage 3 lockdown or 4 like Victoria. So there are differences in terms of if there's new measures, as long as there's agreement in place with the landlord, if it's for leases or with the ATO, where you say, well, if there's a new legislative requirements or regulations that come out, that will be applied on top, then there's no issue that they will be missing out on anything.
No, absolutely. And people seem to have forgotten. The past 6 months has been, I think we all can agree, has been quite tough for everyone involved. But we must also be reflective and say the HEO, landlords, and a lot of people, a lot of governing bodies and government institutions have been quite generous also, in the sense that you've mentioned cash flow boost, JobKeeper, and if you are in Queensland, there was the QRIDA $10,000 grants. So they have spent where money needs to be spent. So they have allocated a lot of funds for small businesses and large businesses to keep them afloat. It seems now that the government has run out, and they're slowly tapering that off. So for people who's hoping that this keeps going on, in my professional opinion, is be very careful. That may not eventuate, and we should start preparing for normal business.
Another misconception a lot of people are having is, well, can't I just use COVID as an excuse? Yes, you can to a certain point. There are things that can be negotiated and some things can't be negotiated. And I think I just want to clarify that at this point in time before as September is coming to an end. One is if there's any arrears in terms of the ATO payments, so maybe you haven't paid the GST properly or you haven't paid withhold tax, you can enter into negotiations. That's fine, but I don't think there's a room for forgiveness or leniency when it comes to super non-payments.
It's super non-payment is actually guaranteed by you individually as a director or as a shopper, as a business owner.
Mm-hmm.
Now, is there room to negotiate?
Yes.
There is definitely room to negotiate. If you are in the postcode, if your postcode starts with 3,000, of course, there's room to negotiate because you're effectively still in lockdown, but it is on a case-by-case basis. The blanket COVID excuse no longer helps too much.
Well, it also depends on their sales turnover. Obviously, if you're struggling financially, they're going to be very lenient, saying, "Well, you're not making any sales, so I can understand why in the last 3 months you haven't been making proper superannuation contributions."
Absolutely.
But I don't think if you're doing to a certain level and you're still not making super contributions, they're going to have a lot of questions around that.
Well, this goes back again to record keeping. If you can prove you are suffering badly, yes, they may look favorably upon you. But saying that, if you are suffering badly and you know the business may not recover, to me, that's almost a prompter to review your state of business with your accountant or your lawyer to see whether or not it is viable to continue or to see what you can do going forward. Yeah,
I think a lot of what our role is generally in terms of legal, there's a legal aspect, but also accounting is it's really important for clients to come and seek our professional help, because whether you're negotiating, trying to assess where am I in terms of my business, let's say your supplier is saying, okay, I want you to pay $30,000 immediately in the course of the next 3 weeks. It's financially unviable. But when you argue and you're trying to negotiate with them, you need financial evidence, and the people who can provide that is accountants who can, finance that based on the sales turnovers to pay back that amount. We need at least 4 months at this weekly amount to do that. That's what they're really required. Same with the ATO. When you try to substantiate why you can only pay maybe $500 per month for the repayment of accrued unpaid ATO debts, you need to explain that, and I think the only way you can explain it is when you have the financial records to prove that, and your accountant can back it up with a letter.
Correct. I cannot state how many times that I've seen where an argument is formed purely based on financial results has helped get the matter over the line in terms of negotiations, not only in terms of debt repayments, but interest remission, penalties removed, and matters completely wiped.
It's even with leases as well. So when we're negotiating the COVID rental relief, we talked about, well, since JobKeeper 2.0 is going to be extended until March, a lot of businesses ask me, well, what if I'm eligible, and what if I have further losses, and how do I do it? Well, it becomes really easy. Legally we put a clause in to say that if there's further impacts, that we can renegotiate for those period from October to March next year. But then obviously how we prove and justify our request for negotiations and new rental reductions is through accounting records. And I really hope you take our advice today really sincerely, and really this is a perfect point in time to really make an assessment, say, okay, where is my business at? Am I financially viable? Do I need to think about closing the business down, or do I need help where I need to get rid of the current debts and then I can give it one more go in terms of operating the business? Or do you just need help to say, okay, I have all these rental arrears, I need to fix it. Can somebody please help me legally and accounting wise to make sure that I can still keep with my ongoing obligations and still pay off my debt? which obviously lawyers can't do that by ourselves because we don't do the accounting and financial side. So that's where accountants come in and play a big role.
I will actually add one common question that I've run into a lot recently is, surely not only accountants can provide the financials. That is actually very, very true. The other main source of financials that people can access is actually their own records, whether it be through Xero, QuickBooks, or any other accounting software report, even if it's, should we say, from your own accounting software. It is still a very good indicator of financial performance and how you are tracking if the accountant cannot prepare it straight away.
Only if though the records are done correctly, because usually what we found out when we sent the clients to the accountant is they were missing a few things, or there was administrative errors. They didn't.
That's completely fine. To us, is based on these records, it is much quicker and much more effective in the sense that rather than wait, should we say, a week to prepare these records, internal accountants prepared reports, it'll take us less than a day to prepare it based on management reports. And from what I've seen, timing is very, very important. And the quicker we can prepare the reports, or either for a legal matter, lease negotiations, supplier payments issues, etc., or getting finance for a bank. It is very important that we get these records very quickly, which is actually my personal advocacy for people to, should we say, shift away from the traditional mum and dad pen and paper and to an online record where you don't solely depend on your accountant, but also your own personal records to see how much sales have I done this month, should we say, how much sales have I done compared to last year.
In summary, you need to go through these simple steps. Review your business and determine where your business is exactly at. With few helps of negotiation of debt, can you recover? If not, then maybe you need to think about insolvency options that's available for your business and for yourself. If you think it is still viable, then you need to determine whether you need to seek the help of an accountant and a lawyer to negotiate any rental arrears or invoices that you owe to suppliers or other third parties, whether it be banks, companies, financial institution, wherever it is. Come to us and talk to us. Make sure everything's evidenced in writing. Any agreements and negotiations that you do with landlords, to ATOs, to suppliers, whoever it is that you owe money, make sure you put that into writing. So simple emails to say, hey, on this day, you know how we agreed on this. I'm just putting into an email to confirm that this are the terms that we negotiated. Are you okay with it? Please let me know if I understood it wrong. Write that down now. Even though if you're negotiating the lease with the center management or landlord, it is so important you still put that summary to say that this has been already agreed upon, but this is stuff we still need to negotiate. Accounting wise, is make sure if you think you're eligible for JobKeeper 2.0 or whether you are eligible for 2.0, contact your accountant, go through the eligibility criteria and make sure that you are. If not, then just always reach out to Henry and ask. Right now may be a perfect time for you to consider the option of moving your accountant from the existing to a new one that's more capable of helping you and provides you a lot more assistance. If that's the case, then as Henry suggested, make sure that you provide the correct documentations, the information to your new accountant. I'm sure Henry is always open for a discussion with inquiries.
Always happy to have a discussion, Sharon. That's how we make new friends.
That's absolutely sure. Be proactive. This is the time to be proactive. If you were dormant until now, just waiting for negotiations to happen, and then you'll figure your actions out. Now it's time for you to make a move. There are help always out there. Henry and so many of the experts that's in the expert profile playlist, and our firm is always here to assist you. If you need help, if you need guidance, please contact us and seek the help that you need. Should you wish to discuss more in detail the information that we discussed today, please feel free to contact Henry or our firm. Thank you for viewing our episode today. I hope you find it very helpful. Please subscribe to our YouTube channel and always get great information to have a successful business in Australia.